is the sort of trades where you have this. My dog's fucking going crazy now. What the fuck? What are you doing? I'm trying to speak here. I'm trying to teach trading. Chill out, please. The best sort of trades are the ones that you want to have a higher time frame target, a higher time frame fair value gap, most likely to use as your take profit. Okay, does that make sense?
Yeah, thanks.
We always want to be trading towards something, right? That's the best sort of trades that we want to take, is when we're trading towards a target. Okay, when the target has already been hit, then the probabilities of the trade playing out is not high probability anymore, because our target's already been taken, right? If we had another fair value gap up here, for example, right? If we had another fair value gap up here that hadn't been tapped yet, right? Then we could say, okay, price could come down to this hourly gap, and then we could get another move up to this second fair value gap up higher, right? But since we don't have that, okay, then the long trade idea isn't high probable. It's not high probability anymore. I guess where longs will be looking good on gold is if on the 4-hour gap, on the 4-hour time frame, since this is a 4-hour fair value gap, right? So if it's a 4-hour fair value gap, we're watching the 4-hour candles. Right? If it's a 1-hour fair value gap, we're waiting for the 1-hour candles. Right? You always want to match the time frame with the fair value gap. Okay, so if we're looking for longs on gold, then ideally we want price to close above this 4-hour gap, right? Inverse it, showing us that the buyers are stronger than the sellers. Okay, and then once we've cleared this, then we can say, okay, gold is showing us that we want to potentially get higher prices. So we wait for a pullback into it, okay, and then to target this high first, right, and then potentially this high second, right? But longing on gold would be risky as long as we're still trading within this 4-hour gap. Make sense, Broski?
Yeah, thanks, man.
Okay. Wayne, all good?
Yeah, but
Anyone else, guys? Anyone else? This is your opportunity. GX, you got any questions? Kat, you got any questions? Suhail, you got any questions, broski? No? Oh?
Nothing. Thank you so much. I'm just absorbing all the info
Absorbing?
that you have just said.
Has it been making sense, Kat?
It's making a lot of sense, actually.
Okay, that's cool. Bills, you all good, brother? Bills is still here. Bill's gone. Bill's gone AFK. Gonzalo, we good, bro? Think we all good, I guess. Think we all good then. Aight. Now let's sort of see if we can find an example for the sell zone. What chart were we charting it on? The sell zone? Was it on gold? Yeah, there we go. Now let's see if we can find an equivalent of an example. Boom. Would have inversed. Yeah. I guess this could have been a good example, I guess. We would have tapped into it. Let's check on the 1 minute. Yeah. I'd say this is a pretty good example. Okay. Let's check that we're recording. All right, all good. Okay, so sell zone. Let's say, look, on the Discord, whenever I'm putting in my buy zones and sell zones, okay, sell zones are areas on the chart where I'm potentially looking for a sell. Okay, as I said, I'm not going to be entering straight away as soon as price enters here, right? We will be waiting for our entry confirmation, which we went over for the long criteria. Now the short criteria is exactly the same, it's just opposite, right? Because we're going in the opposite way. Okay, so let's say, for example purposes, we had a sell zone right here. Okay, so this is what it would look like. Boom. I would always give you the levels so that you guys can see. Okay, I will mark the line so you guys can read the levels on the right. Okay, so you can see that this sell zone this is what it would look like on the chart. Okay, we would wait for price to come in here, and the moment that we start rejecting it, we would be looking for a trade. Okay, what's up, Bills? You back?
Yo. Yeah, I'm back. Yeah.
Okay, so as I said, guys, same for the buy zone. Okay, the first thing that we do the moment that price enters our sell zone, okay, what do? We scale down to the 5-minute time frame, okay, because that is the time frame that we are looking for executions. Okay, now on the 5-minute time frames, what am I hunting for? I'm looking for a low to be created. Okay, when we were looking for longs, right, we were looking for highs to be created so that we could get a 5-minute break of structure to the upside. Now we are looking for the lows to be created, okay, for a 5-minute break of structure to the downside. Okay, so the moment that we tap into this zone, okay, what am I looking for? I am waiting for a low to be created. Okay, so we tapped into it with this candle here. Okay, have we created a low? No. Let me do it here. Let me exit this fucking things. Okay, have we created a low here? Not yet. Boom, first low. Why? It's a down candle followed by an up candle. Okay, so boom, we mark out our low right here. Okay, now do we see a 5-minute candle closing below here? On this candle, no. On this candle, no. On this candle, no. Then what do, guys? We form a new low. Okay, look, down candle followed by an up candle. So we move it. Okay, we move the low because we created a new one right here. So the new low is here. Okay, so this is the new low that got formed. So did we get a candlestick closure on here? No. This one, yes. Finally, we got it. We got a candlestick closure below the most recent low that we created. Okay, so step one is we got our 5-minute break of structure right here. Okay, so let me just take the toolbox. Okay, 5-minute break of structure when a bearish, okay, because this is a selling scenario, when a bearish candle body closes below a low. Motherfucker. Okay, step 1. Okay, 5-minute break of structure when a bearish candle closes below a low. Okay, which we would have got here. Okay, would we have entered short off this break of structure? No, we would have not. Why? Because look, there is this huge 5 minutes right here. Okay, so this is one of those scenarios, guys, where it does require you to, yes, have a little bit of, knowledge. Okay, use your brain a little bit, right? If we are going to be shorting and we have a huge 5-minute fair value gap literally right below price, is this smart? Probably not, right? And in that case, it literally shows, right, that it would have saved us our loss. Because look, if we would have entered off this 5-minute break, right, we would have put our stop loss above the high. Okay, and what would have price done? Price would have come down into this 5-minute gap, and then what would have done? We would have got stopped out. Right here, this candle would have come up and stopped us out, right? And in the end, the idea was right? Price ended up selling, and this would have been super frustrating, right? Because we were right on direction, but we would have got stopped out, right? But over time and over experience, I realized, okay, and this is not something that's why if you were to follow a strategy, we are not fucking AI, we're not fucking robots. Okay, so we can have an entry criteria, but obviously if the conditions show us that probably yes, we are getting our entry criteria, but we're also seeing that there's a high chance that we're going to get stopped out, then we choose to avoid it. Okay, and that's how we can gain and avoid these stupid losses. Okay, so what would we have been waiting for before we even thinking about shorts, right? Is that we would have waited for this 5-minute fair value gap to get inversed. However, this is where things can change a little bit, okay? Because look, price broke structure here on the 5-minute, right? This is where you're gonna have to bear with me. Price broke structure on the 5-minute here, okay? That is our first tick done, okay? However, price then started rejecting from this 5-minute bullish gap. Okay, we even came up, right? We took out this high one more time. Okay, we chopped up, we went higher, we still chopping. Okay, then what did price finally decide to do? We decide to push up, right? And during this push up, what happened? We created a new 5-minute fair value gap, right? So we're no longer too interested in this first one that was down here. Okay, why are we no longer interested in it? Because price already tapped into it multiple times. Okay, and the more that price taps into a fair value gap, the more power it loses. Okay, before, if we were to enter off the 5-minute break of structure right here, right, we hadn't tapped into this 5-minute yet, so this thing still had a lot of power. Okay, however, after tapping into it multiple times, once, twice, 3 times, 4 times, 5 times, 6 times, 7 times we tapped into this 5-minute gap. Okay, this thing has lost its power a lot. So when we see that price has created a new 5-minute fair value gap right here, okay, this is the one that we are now focusing on. And this is what we are waiting for step 2, which is 5-minute inverse. Okay, so before we even think of shorts, what are we waiting for? We are waiting for this 5-minute gap to get inversed. Okay, now you can see that price came really close to it here. We came close to it, but we didn't quite close below. Right, we came close to it here a second time, but we didn't close below. We came here a third time, but we still didn't close below. However, on the 4th we did. Right, so this is the valid inverse. We finally fully closed below this 5-minute gap, so we got the inverse. Okay, now technically, right, this could have been our entry as well, right? Our stop loss would have gone above the high, okay, as always. Okay, and then we would have targeted TP1, okay, at a 1-to-1, okay, which would have taken us, below this low, right? TP1 1 to 1 always, okay, right here. The moment that TP1 would have got hit, right, what do? We move our stop loss to our entry level, okay, which is unfortunate, guys. As you would have seen, price would have hit TP1, and then what would we have done? It would have taken us out at break even, and then what would have price have done? Shat the fucking bed, right? However, this scenario that I'm currently charting out, okay, it happened way late into the day. We're talking 8:20 p.m. right now, right? 8:20 on UK time, right? So for me, this was like 2 hours ahead. This is not even during session time, okay? This was just a move that happened during a news event, okay? So obviously the conditions aren't very nice, right? So here we did get a lot of chop. So when there is a lot of chop, then the chances of this happening to us is likely. So this would have been just unlucky, okay? But let's say that we wouldn't have put our stop loss at break even, even though we would, right? Then this trade would have banged out a good amount, right? A good risk to reward. Adding the stop loss at break even, it's something that I've added on top of this entry model, right? Which have saved me countless losses, right? Because we are learning to manage our risk, okay? And it's a good thing to do, okay? However, looking at purely the entry model, this would have played out, right? But with experience, I always put my stop loss at break even at least at a 1-to-1, okay? However, there is going to be some times where I'm going to be like, okay guys, I don't want to put my stop loss at break even yet, because I do believe that price is going to come down lower, okay? That does happen sometimes, and I will tell you when that's obviously going to happen, okay? So this is a little bit of a tricky one too, right? Because look, we actually created a 5-minute fair value gap. Okay, we created a new 5-minute fair value gap before we inversed the bullish gap, right? Before, in the long scenario, it was pretty straightforward, right? But you're gonna realize that the market is not always gonna give you the most fucking straightforward answer. Okay, sometimes you are gonna have to improvise a little bit, okay? And so this is one of the times that we would have had to improvise. Okay, usually we wait for a 5-minute break of structure, which we would have got right here. Okay, look, this is the low that we created. Okay, down candle followed by an up candle. Okay, look, this 5-minute candle here, we closed below the low. So step 1, tick, 5-minute break of structure. Okay, next, what are we waiting for? A 5-minute inverse. Okay, so we want this 5-minute fair value gap to get inversed, right? Step 3 is wait for a new 5-minute fair value gap to get formed, right? However, this is where we had to adapt, because look, the market formed a new 5-minute gap before we inversed the previous 5-minute, right? So this is where, it is a little bit riskier, right? But ideally, okay, if price is breaking structure already to the downside, okay, these candles do look bearish. We are also reacting off a sell zone, right? We know price wants to come down from here, okay, and we see that price has created a new 5-minute fair value gap. I could be interested in potentially looking for shorts from here. Okay, even if we haven't inversed this 5-minute fair value gap yet, right, I do see that the previous candle that we made looks very bearish. So the chances that the next couple candles following it are also likely going to be bearish, right? So this is almost like an early entry, right? We are already looking into the future, expecting this fair value gap to get inversed, right? So what would we have done? We would have waited for a tap into this 5 minutes, okay? Then what do? Once we tap into this new 5-minute gap, we do what? We scale down to the 1-minute time frame, okay? Let's scale down to the 1-minute time frame. And what do we wait for on the 1-minute time frame? We wait for, you see, price tapped into the new 5-minute gap right here. Okay, this is where we tapped into it. Boom. Now we wait for a 1-minute break of structure. Okay, so what are we waiting for? We're waiting for a low to be created. The minute we tap into it here, have we created a low yet? No, we haven't, because we haven't formed an up candle. But here we have down candle followed by an up candle, Boom. This is our low. Okay, so what are we waiting for? We're waiting for a 1 minute candlestick to close below the low to form the 1 minute break of structure. So we would have got it here with this big ass 1 minute candle. Okay, where would we have put our stop loss? We wouldn't have put our stop loss above here because that's way too tight. Okay, we would have probably put it above this high so it's protected. Okay, so it's protected, and then we would have targeted lower. Okay, and as you can see, right, price, we entered literally the moment, once again, right, the moment price decided to shit the bed. Okay, because we are literally precising our entries so fucking well that the moment that we enter, we always experience minimal drawdown, and if the trade idea is right, price should go straight down. Okay, obviously here we would have hit our take profit one, and then price would have come back, right? We would have got stopped out of break even, unfortunately, and then price would have just continued dumping, right? But we still would have made money. It's a TP1 and we still would have caught a dub, right? But it would have just been unfortunate that price would have continued going out without us. Okay, so if we really wanted, okay, if we really, and also guys, look at this, look at this, look at this. If we really wanted to play it safe, okay, and we would have waited for this 5 minute to get inversed, right? We would have got that shit anyways, because look, the minute that price taps into this 5 minute fair value gap that we created, right, we still had not inversed this 5 minute gap to the left. We still hadn't. Okay. However, look, the moment that we do end up getting the break of structure, right, the moment that we do right here with this bearish candle here, the moment that we do, we actually do close below this 5 minutes, right? And if we look on the 5 minute time frame, look, our entry, right? Our entry is actually this 5 minute candle closing below it. So it would have been perfect. It would have been perfect. We would have broken structure on the 1 minute, and also the 5 minute would have inversed this fair value gap at the same time, right? Two birds, one stone, baby. Right? So that would have even confirmed to me even more that price wants to continue down lower, right? And so that would have been the setup. Okay? Let me now try to mark this out in the most simple way possible, because this is just fucking crowded. Like, price is just chopping up and down here. It's hard to make things clear. Let's see if I can find a better scenario. I mean, fuck it, let's just do it with this. It's just not gonna be very clean, but let's just do it with this. Because we do get all of this. Okay, so entry criteria for short zone. Short scenario, 5 minute breaker structure when a bearish candle body closes below a low. Okay, 5 minute inverse. 5 minute inverse. Wait for sellers. Okay, wait for sellers to close below the most recent bullish fair value gap. Okay, wait for a new bearish 5 minute FVG to get formed, and wait for a tap back into it, then go to the 1 minute time frame. Wait for a 1 minute break of structure to the downside, or 1 minute inverse for entry. Okay, now in terms of let's turn this into red. Short zone. Okay. Now, what do we get here? We've got the 5 minute. Actually, wait, let's do this. We got the 5 minute BOS right here. 5 minute BOS. Bitch. Well, there we go. 5 minute break of structure, and then we would have got the 5 minute inverse. Okay, right here. See guys, the market is not gonna always give you the most pretty fucking setup, right? So this is a good example to make you realize that this is how it is sometimes in the live markets, right? It's not gonna be all pretty and drawn out for you, you know, textbook setup. Sometimes you're just gonna have to fucking deal with it and adapt to the way that price is. Obviously, the first time that you guys are gonna start applying this to the markets, it's gonna be new, right? So, you know, be kind to yourself. Be kind to yourself. Don't expect, you know, to nail it first try. Okay. It's all about being kind to yourself. Okay, you are the only person that can discourage yourself, right? There's no one else that's going to discourage you faster than yourself. So take your time with learning it. Have patience. Realize that you are learning, and learning takes time. Okay, it's okay to be a beginner, and it's okay to suck. Okay, it's okay to suck. It's fine. Everyone sucks at some point. Five-minute inverse right here. Okay, 5-minute inverse, and then here we have. That's why I'm having to use the arrows, because this is just messy. 5-minute inverse. Okay, here we have a new 5-minute FVG. Actually, this could be helpful, guys, if I do this. Look, step 1, boom. Remove this fucking text box border. There we go. Step 1, step 2, step 3. Okay. Sell zone. Okay, sell zone. 5-minute BOS. 5-minute inverse. New 5 minutes. Okay, and then in here you would have got step 4, which is the 1-minute entry. Right, step 4. It would have been in here. Right, step 4. 1 minute. somewhere in here, right? Step 4. There we go, guys. Holy shit. Having to fucking work on my drawing skills. Holy moly. Right, there we go, ladies and gentlemen. Holy shit. Does that make sense? Please tell me if it doesn't. Please tell me if it doesn't. Does that make sense?
Yeah, it makes sense.
Are you starting to understand how I'm entering off these buy zones and these sell zones and what my entry criteria is?
Yeah. Bro, I've been stopped out so many times, like in the past 24 hours, just because my stop loss being too tight.
Yeah, so the stop loss placement is very important. And as I said, you never wanna put your stop loss, for example, in the middle of something, right? You always want to put it above a structure, above a high if you're looking for shorts, or above a low if you're looking for longs, right? For example, if we were to enter this trade here, right, we would never just want to put our stop loss halfway through this fair value gap, right? That would just be risky, because in this case it would have played out, but there is sometimes where price is going to want to just come up, sweep this high one more time, and then come down, right? So you always want to give some breathing room to your stop loss. Okay, always above the high of the sweep. Usually, it's what I like to do. If we're sweeping liquidity, right? If we went up and swept the high right here, this is the liquidity sweep that caused the move down. Okay, so we will put the stop loss above the high of the sweep. Okay.
Yeah.
So that usually is always protected. And yeah, that's pretty much fucking it, guys. That's pretty much it. It's fairly simple, like obviously writing it down and going things step by step, 4 steps, it can feel like a lot, especially if it's the first time that you are hearing about this concept, but I promise you that you will be able to see this shit in trading. Everything happens so quick, so over the time you're gonna be like, oh yeah, boom, we broke structure on the 5 minute, boom, we inversed, boom, we tapped into it when the 1 minute Reiko structure entry. Like, it's gonna become fucking clockwork. You're gonna be able to spot it in no time, right? And that's where the point that you're gonna get to. It just takes time, right? It's just like learning any skill. Over time you just become more familiar with the concepts, and then your eye gets trained, and your eye and your brain end up picking on the patterns way quicker. Okay. But I'd say that's a good start for tonight, guys. Like, learning at least now, every single time that I'm sending a signal out into the group, you guys are going to be able to understand my buy zones much better. You're going to be able to understand my sell zones, and you're going to be able to also understand why I'm entering this trade, how I'm entering the trade, and where I'm going to be looking to take why I'm putting my take profits where I'm putting them, where I'm putting my stop loss, right? If you guys struggle with your entries, if you guys struggle with your exits, have a look and pay attention where I put my stop losses. Have a look where I'm taking profit. Have a look when I'm putting my stop loss at break even, right? These are all sort of tips that you can take away in your own sort of trading, okay? And yeah, that's it, lads. That's fucking it. Tomorrow morning I'm gonna hop on the charts, obviously for the morning live stream. I'm gonna send out my vision for gold and Nasdaq and Bitcoin. We're gonna see what we're gonna do overnight, right? Expect some video modules coming out as well on all the other confluences that make up my strategy. Like, how do I find these buy zones and how do I find these sell zones? It's a combination of all of these different confluences put together. So I will make individual videos on each one of them. I didn't plot all of them out here, right? I think there's about 7 or 8. So that's going to be cool, almost like a mini boot camp, and then you guys can basically understand in detail every single confluence, and then the ones that fit well with your strategy, right, you can implement them. The ones that you don't like, you don't, right? But at least you can have, you know, a good range, like a toolbox. Basically, you're gonna have an arsenal of a bunch of different confluences, so you're gonna be able to find the best fucking levels in the market and the levels where price is most likely to react from, right? So you can get the best sort of fucking entries, you can catch the bottoms, and you can catch the tops. Okay. And yeah, if you guys are watching the recording, I'm going to end it now. Hope you guys found this informational. If you have any questions, reach out to me, put it into the Discord, into the trade chat. I'm sure other people will also benefit from answering any questions that you might have. All right, peace and love. Bye bye.